that's where that paycheck is going to come from down there. So the portfolio essentially has three parts now. We've got the equity part, and that's where you're going to get your good long-term rate of return. That's the reason that in 2013 your portfolios did so well, is because equity markets performed so well. Then we've got the fixed income part, which can tend to move somewhat opposite of that. So in 2013, that part of the portfolio didn't do well at all, but in 2000, right, there's going to be the cost of the investment planning, and then there's going to be the cost of the financial planning. So we've got mutual funds as an investment. We could use something like ETFs, or we could build a portfolio with individual stocks and bonds. So with a mutual fund, there's a cost inside that called the MER, management expense ratio. So when you look at your statement and you see that your rate of return is 10%, what that really means is the fund manager made maybe around 12.5%. But
prepare something called we have our own stock portfolio template. Okay. First page is the KYC information I gathered from the portfolio request form, just general information. And then the next page, I'll go into the asset allocation breakdowns, what they have versus what we recommend. Okay. And then I'll talk about the fixed income side. Does the cash flow make sense? Are the bonds laddered? Does the duration make sense with the right? So the idea is that, for example, if the client has a CIBC portfolio, this is the issues wrong with CIBC, and this is how we can make it better with the IG portfolio. And this is where our discussion happens. If it takes more than one appointment, sometimes it takes 2 to 3 to get on the same page. How many appointments you need, up to us, and then we'll decide accordingly. But this is the most critical
to work towards any of these goals. So what I'm going to do is I'm going to walk through their balance sheet and show them the consolidation opportunity with an IG mortgage. Okay, Dave and Deanna, I wanted to bring you in today to just have a discussion about debt and managing your debt. And I know in the past we've talked about your goals as far as wanting to get your debt paid off, protecting your family in case of a premature death, setting up an education plan for your kids, and building up a short-term reserve.
Products or services to our clients if that's what's best for them. Now, most people face financial challenges, and you'll probably agree that when it comes to financial independence, most people associate that with a comfortable retirement. But the startling fact is that the majority of people don't feel they're ready for retirement. In fact, if we surveyed boomers, most of them said they weren't ready.
Hello, my name is Lloyd Tiley. I'm the Regional Director for Investors Group in the Niagara region. And we thought it would be beneficial to put together a training video showing the Investors Group business discipline. This will be Niagara Region Investors Group consultants doing it for Niagara Region consultants. The business discipline is a 7-step process. It's time proven if you follow it.
Investable assets per household based on the age of the head of the household. And what you'll notice is that regardless of the age, people with advice have more assets. And not just a little bit more, but substantially more. 3, 4, or even more than 5 times more. And this same relationship holds true if we break this data down according to household income. We can clearly see that people with advice have multiples the number of investable assets than people who don't. So regardless of the age or income level, the bottom line is that people who don't seek professional advice have much worse.
Today about goals and concerns, gathering information for the personal financial review, gathering information on investment risk tolerance, and gathering information on insurance needs requirements. And I have a 6-step process that I use for financial planning. So it isn't something that I do all in the first meeting, or by meeting 2 everything is complete. So typically meeting 1, when I'm meeting the clients for the first time, I get a very brief outline of what their goals are. I don't get into too much detail, but I just want an idea of what's exciting.
This is going to become the money that's going to let you do all these things you have to do in retirement. So, because up till now, money's just been a renewable resource. If you need more, you just go back to work, do some work, they pay you, and then you spend that money. Point's going to come where they're going to be saying, all right, this is all that you're going to get, so now this has to last the rest of your life. And if you don't have a solid plan for that, then that's where you're going to run into trouble. So, the good news here is this shows, like I said, you've got all the pieces of the puzzle, just a matter of putting it together properly. Now, the other thing I look at over here is from the state.
Just wanted to present a couple of ideas that I found really helpful. For some of you who don't know, I started in 2007 when everything was hunky-dory. Markets were going to go up forever, and then the next year, as we know, 2008 happened, and it really created a lot of fear in the marketplace. It created a little bit of tension on investing, and one of the things that really resonated with a number of my clients was our real property fund. So I wanted to talk to Mr. and Mrs. Smith about our property fund. And then just lately I've been, for those who aren't necessarily going to have a whole symphony proposal that is presented for them, you've had lots of concepts on symphony during this series. So good to see you again.
Nice to see you, Richard.
2008 happened, not too long ago. There was a lot of fear. So now it's 2009. And the markets are going up a little bit. How are you feeling about the marketplace? Are you feeling encouraged? Are you feeling nervous?
A little bit nervous from 2008.
A little bit
but
nervous.
Yeah.
Still got a long way to go
we
back.
got a long
so.
way
Long way
to
to
go.
go
Yeah.
I know that you have some of your investments held in another institution. I'm not sure what kind of support you have there. So one of the things that I wanted to talk to you a little bit about is something that is completely separate from the day-to-day fluctuations in the market that we're seeing in the news every day. Up 200, down 200, you lose 3%.
Early, and they want good investment returns. But what's most interesting about my job is that everyone is unique. Everyone's different. And I need to spend the time to really get to know what that means to them. For example, what does financially independent mean to you? When do you want to retire, and what can you spend? What do you consider are reasonable investment returns? So I don't know. It takes a lot of time to really get to know people's situation and build them a financial plan around that. So what's unique about this, though, is that for the privilege of managing your investments, we provide our clients with a written financial plan to get them from where they are now to where they want to be. And I think this is why we're the leading financial planning company in Canada.